Good morning friends, welcome to The Point. I hope you are doing well in your studies. Talking about today's video, we will be discussing about a scheme called Strategic Debt Restructuring Scheme, which was launched by RBI in 2015 in lieu of mounting NPAs in the economy. So we'll start with the scheme. Strategic Debt Restructuring. When mounting NPAs, RBI has introduced SDR scheme or Strategic Debt Restructuring Scheme in 2015 to let the bank recover their loans from the ailing companies. It lets the Joint Lenders Forum or simply the Consortium of Lenders. So Consortium of Lender or Joint Lender Forum. So JLF, I have taken a separate video on it, and the Consortium of Lender is simply the group of lenders to convert a part of their loan in ailing company into equity. So under this scheme, it provided more power to the lenders so that they can convert the part of unpaid loan to them into equity or the shareholding in the company. So at this time, if you know, many schemes were launched by RBI, like 525 scheme. There was a scheme called S4A. There was a scheme for CDR, that is corporate debt restructuring, and all were launched because there was so much NPAs standing in the balance sheets of bank, and at the same time the corporates were showing a lot of loan amounts that was due to the banks. So this was called twin balance sheet problem, and to solve all this such schemes were launched. In this scheme, especially it was focused to give more power on to the group of lenders so that they can solve the problem of their unpaid loans. By this, the scheme will provide more power to the banks in managing the loans defaulted by the company so that they can recover their dues. So the main focus was to give more power to the group of lenders. On to the next slide, which talks about the features of the scheme. The first feature is that under this scheme, banks are made as majority owners and they will replace the existing management of the ailing company. So obviously the company is ailing, that's why it is not able to repay its debt. So the first thing that the group of lenders will do after becoming the equity holders or the shareholders is that they will replace the existing management of the company and they will convert or turn around the company into financially viable one. So the financially viable means that the one which is able to service its debt properly on the time and is able to generate revenue. So the first thing the Joint Lenders Forum or group of lenders will do is to replace the existing management and then convert the company into financially viable one. And once it has started generating revenue or has become financially viable, it can sell its share in the open market or at the stock exchange to a new person. Next is JLF would be responsible for taking a decision on invoking SDR by converting whole or part of the loan into equity shares. The decision made has to be approved by the majority of JLF members. Now the decision whether the company's outstanding loan will be converted into equity or not will be solely dependent upon the group of lenders, and the decision has to be approved by majority of it. So it is not the case that if the one lenders say that it should be converted into equity, it has to be implemented. The majority of lenders has to approve it. Next is JLF should hold at least 51% of the equity shares of the ailing company. So the minimum holding should be 51%. For an example, if the loan extends to 100 crores, fine. So if a group of lender has extended 100 crores, now out of this 65 crore is the amount that the company is not able to repay to the group of lenders. So now the holding would be, now if this amount is converted into shareholding, so the group of lenders would be holding 65% into the ailing company. So at least 51%, as it is mentioned, should be held by the JLF and not less than that. Loans restructured under the SDR scheme will not be treated as non-performing assets. It is very obvious because now it is no more a non-performing asset, because the amount that was due has been now converted into shareholding and efforts are being made to convert the company into a financially viable one. So it is no longer a non-performing asset for the bank. So these were the major features of the scheme. The things that were important for you to know, I have already covered in this video. One point to tell you that this scheme is no longer in function. It was discontinued around 2018 or 19 by RBI. So we do not need to study this in much details. So friends, this is all for the today's video. Thank you so much.